Hi viewers, welcome to the stock market teachings. We are going to make web series of teachings in sequential number of classes. In this class 1, I am going to teach you everything that you should know about how the stock market works. The stock exchange is a marketplace where buyers and sellers meet exchange together the stocks and money. In very simple words, the place where transaction happens. Stockbrokers used to stand on trading floors and deal face-to-face human trading. The internet trading started in India in the year 2000 and National Stock Exchange NSE opened up the internet-based trading system as the first stock exchange in India. You can stay connected via internet, you can participate in trading and investing from anywhere. Now, one should be knowing, why do we need to invest? In today's world, whatever we earn and spend towards cost of living like housing rentals, food, grocery, medical and transport etc. will keep on increasing its prices due to inflation. Inflation means growing cost of living, so just saving will not be enough. You have to invest in the right place, whatever your long-term plans or goal might be. It might be either your retirement plan or long-term wealth option. Yes, you can create wealth by investing and can be better returns at defined time period. This might be anything like children's education, marriage, buying of houses, holidays, retirement, or for better standard of living. The right place to invest is different for everyone, other as it is subjective based on one's risk appetite. There are many asset classes such as fixed income instruments, real estate, equity, gold. In the investment world, there is one most popular principle or a thumb rule. The low risk, low return, high risk, high return. So, one has to take some calculated risk to get good returns. If someone don't want to take any much risk or minimal risk, they should invest in fixed income instruments such as bank fixed deposits, popularly called as FDs, bonds issued by Government of India, or government related such as National Highways, NHI, HUDCO or any other government departments, and the bonds issued by corporates as corporate bonds. Even buying is considered as low or medium risk and gives good return as bullion investments. Here I have to tell you one thing. In fact, you would have heard this with bullet speed voice or fast forward voice in many investment based advertisement. Says investments are subjected to market risk. Please read scheme related documents before investing. This is the interesting statement to discuss. Like it stated, all the investment we make has some risk in it and it's subjected to stock market risk factors. Like for example, in current situation, the Russian-Ukrainian war and the world events has an impact on stock market, and this influence or impacts on everything right from gold prices to crude oil prices. We have seen increase in price of petrol, diesel, consumer goods, etc. For world's bad events like COVID pandemic, lockdown, wars, etc. So all our investments are subjected to market risk. I also wanted to give a disclaimer here. In this entire web series of stock market teachings, We are just giving a training and should be taken only as educational purpose. Like I had mentioned in earlier introductory video, we do not provide any recommendation in investment or trading tips. You should learn the core concepts of financial markets here and start practicing yourself as a part of learning and can make your own decision by your knowledge and choice. Can be better in your investment journey or trading journey. Going back to our topic, like I said, one can choose their investment based on risk they take. Majority of the people who doesn't have much exposure in markets or in general people, investment in real estate or buying open plots or lands of houses. In India, only less than 2% of population invest in stock market directly. We have approximately estimated of 1.5 to 2 crore demat accounts overall. We see people invest in real estate at fast growing ventures across the cities or towns everywhere. My personal view is real estate doesn't have right price discovery and mostly run by middlemen and agents and is purely speculative businesses. And it has liquidity issues as we can liquidate immediately and can walk out of money. We can only sell it as whole unit and it's difficult to find a right buyer immediately. Anyway, it's just my view or how I look the real estate. I have wanted to keep it to myself. Investment into precious metals are like you are buying the God's wealth. For example, if you buy and keep a gold brick or a silver brick with you, it can be preserved and can taken out and sold at anywhere in the world at any time. We see gold and silver coins and jewelers considered as wealth from the ancient historical times. This yellow metal is the only ancient currency which is still valuable and as wealth, and it has no borders. Maybe that's why it's called as God's currency. If you can see the historical prices and bullion investments can give on average of 8% approximate returns. That's why people buy gold more on various occasions. The gold is the only commodity. Majority of populations are almost everyone buys it. Every rich middle classes or poor buys and holds at least a gram or a milligram of gold. It has a part of our tradition and can see in our rituals. We have many ways of buying gold now. And as in gold bonds, I will explain about sovereign gold bonds as separate class later. Equity investments are investing or owning a part of share or partnership in a company. Equity has right return with right risk comparatively with other asset classes. We will be discussing about every asset class concept wise in future classes. Investing is the great option. Everyone should invest. Just keeping our money in bank account lying unused is no fun. Because in India, if you see the interest paid by any private or public sector bank is between 3 to 5% per year, and the inflation rate itself more than 6% per year. So it's a bad idea to keep the money ideal into the bank accounts as long-term saving as the money melts down like an ice. In my personal view, you should keep only emergency expenses for 6 months expense or salary into liquid asset like bank saving for emergency. Equity investments are buying of shares of equity investments are buying of shares of publicly listed companies and the shares traded in Bombay Stock Exchange and National Stock Exchange. Equity gives you fair return. Equity gives you fair returns. If you can see the over past 15 years history, the CAGR return generated approx 15%. CAGR means compounded annual growth rate. In equity investment, one should have patience and give time to equity market to compound growth. It's absolutely okay if you invest via equity mutual funds. If you invest for a long term or do systematic investment, you will get the best returns. If you invest for a long and do systematic investment, you will get the best return. The power of compounding works like a magic for everyone. You don't need to be lucky to take advantage of the power of compounding for long-term investments. We need to just know how to invest and how to pick right company to invest, which fundamentally, technically and qualitatively strong companies. We have two exchanges in India, NSE and BSE, which will open from Monday to Friday 9:15 a.m. to 3:30 p.m. Indian Standard Time. We can buy or sell stocks of the companies within these days. We need to have a demat account and a trading account linked with a bank account which has net banking facility for online banking, or adding the funds to the trading accounts to make the transaction. In India, there are two types of demat accounts, CDSL and NSDL. We will discuss about the demat or depository participant more in the future course timeline. For just now, for now just understand demat is the only depository which hold you purchased stocks of companies. For now just understand demat is the only depository which holds your purchased stock of companies. If you are confused on any topic, no need to worry. This is just an introduction. We will deep dive in upcoming classes. You can post your comment and suggestion or feedback. You can also post your questions. If you are new to investing and watching this video, you are at the right place. One should start in investing journey as early as possible in life. If you are already investing, you can just post a comment below. If you are already investing, you just post a comment below at what age you have started investing, which will leave an inspiration to others. Also, post what is your view on investing. Please do post a comment, like, subscribe and share to the right people. Thank you very much. Happy investing, happy trading, happy learning. Be happy.